Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting with some interesting news about Ottawa's proposal to offer a goods and services tax rebate on new homes, which could save a typical first-time buyer nearly $27,000, according to the Parliamentary Budget Officer.
That's a significant amount for first-time homebuyers, Steve. It seems like a real step towards making homeownership more accessible for Canadians who are just entering the market.
Absolutely, Janine. The Parliamentary Budget Officer's analysis suggests that over 71,000 new builds could qualify for this rebate throughout the program's duration. The proposal aims to eliminate the federal portion of the sales tax on new homes priced up to $1 million for qualifying first-time buyers.
And what's interesting is that the rebate would gradually decrease as the price of the home approaches $1.5 million. This seems like a well-thought-out approach to ensure that the benefit is targeted towards those who need it the most.
Indeed, and the program is expected to cost around $1.9 billion over 6 years, with the government estimating tax savings of $3.9 billion over 5 years. The difference in these figures seems to stem from varying expectations about the program's popularity.
Right, and if the program does become popular, it could potentially boost housing construction to meet the increased demand. Although there's also the risk of rising home prices in the short term, as noted by Desjardins Economics.
That's a good point, Janine. The program's impact on housing prices will be something to watch closely. Interestingly, the Desjardins report anticipates that 85% of new homes built during the program's timeframe could be eligible for the full GST break of up to $50,000.
And for those rolling the GST portion into their mortgage, the savings could translate to about $240 less in monthly payments. That's a tangible benefit for new homeowners.
Yes, it's a substantial saving. The GST rebate is part of broader legislation that also includes a promised income tax cut, slated to take effect on the 1st of July. It's a comprehensive package aimed at improving affordability for Canadians. Our next topic takes us to a concerning update from the Canada Mortgage and Housing Corporation, which has flagged growing risks in the condominium markets of Toronto and Vancouver. They're observing a significant drop in sales and mounting financial stress among investors, which could have long-term implications for housing supply?
It's indeed worrying, Steve. The data reveals a 75% decline in condominium apartment sales in Toronto since 2022, and a 37% drop in Vancouver by the first quarter of 2025. These figures highlight the challenges brought on by higher interest rates and reduced affordability.
Right, Janine. With these steep declines, inventories are rising sharply. In Toronto, the months of supply for pre-construction condos have shot up to 58 months in the first quarter, which is 14 times higher than what we saw in 2022. Vancouver is experiencing similar challenges, although to a slightly lesser extent.
And this isn't just about numbers. For many investors, the situation is translating into real financial stress. Condo resale prices have fallen, wiping out some of the gains made during the pandemic. In Toronto, prices have slipped by 13.4%, and in Vancouver by 2.7% since 2022.
Exactly. And for those who invested in pre-construction units with the expectation of continued growth, the potential capital losses are significant, up to 6% on 2024 purchases in Toronto, according to the report. It's a tough environment for investors right now.
The rising carrying costs are also a burden. Since 2022, these have increased by 24% in Toronto and 29% in Vancouver, while rent growth hasn't kept pace. This imbalance makes it harder for investors to cover their costs. especially as resale values dip below purchase prices.
And it's not just about the present pressures. The unsold inventory is delaying or even canceling future construction projects. In Toronto, 55% of pre-construction units remained unsold in the first quarter of 2025, which is just below the record from the previous year. This is problematic because lenders usually require a 70% pre-sale threshold to release funding for projects.
Some developers are trying to adapt by shifting towards purpose-built rentals, but others have had to shelve their plans entirely. While this slowdown might offer short-term relief for buyers and renters with moderated rents and softened prices, it poses a long-term risk to housing supply.
That's a key point, Janine. The Canada Mortgage and Housing Corporation warns that today's project cancellations could lead to fewer housing completions in the future, exacerbating the existing housing shortage. While the immediate effects might ease some pressure, the long-term structural issues remain a serious concern. Now let's pivot to the latest economic developments affecting the real estate sector. We've got some concerning news from Innovation, Science and Economic Development Canada. Insolvency filings have jumped by 10% in April compared to the previous month, a reversal from the easing trend we saw earlier in the year.
That's troubling, Steve. It seems like rising debt and economic uncertainty are really taking a toll. The total number of filings reached 11,950, up from 10,864 in March. Both consumer and business insolvencies have contributed to this rise.
Indeed, Janine. Consumer insolvency filings, which include bankruptcies and proposals for debt renegotiation, rose by 9.2% month over month. Business filings saw an even sharper increase at 18.6%. It's clear that the economic uncertainty tied to slowing growth, trade policy concerns, and cost of living pressures is having a significant impact.
And while the consumer insolvency rates have increased, they're still slightly below pre-pandemic levels, with the national rate at 0.333 per 1,000 adults. But there are regional differences. Newfoundland, New Brunswick, Nova Scotia, and Alberta have the highest rates, which is concerning for those communities.
Absolutely. And if we compare this to April of last year, total insolvency filings rose by 1.8%. Interestingly, while bankruptcies increased slightly by 0.2%, proposals actually declined by 2.5%. It's a mixed picture when you look at it from a provincial perspective as well.
Right, Steve. Some provinces like Newfoundland and British Columbia saw year-over-year increases in insolvencies, while others like Ontario and Alberta actually saw declines. It's a complex situation, and it highlights the varying economic conditions across the country.
Business insolvencies, though smaller in number, followed a similar pattern. Ontario and Quebec led the increase in April filings with significant month-over-month surges. Yet, on a yearly basis, national business insolvencies have declined by 15.1%, largely due to lower figures in Quebec.
It's interesting to see the sectoral breakdown as well. Higher insolvencies were noted in manufacturing, while declines were seen in administrative, transportation, and food services. Alberta's situation is particularly notable, with consumer proposals up by 45% compared to 2019, despite a drop in bankruptcies.
Alberta's households continue to face high debt-to-income ratios, making them vulnerable to economic disruptions. The future path of insolvency filings will likely depend on shifts in employment and household financial resilience.
It's a challenging landscape, Steve. As we continue to monitor these developments, it's important for individuals and businesses to stay informed and make strategic decisions to weather these economic uncertainties.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.